Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Streamline Capital. Excited for today's show. We've got John Funderburk with us today. John, welcome.
Glad to be here, Brian.
Awesome. And good to have you on. And let's do this. Let's start talking about you. Tell us a little bit about yourself and how you got into this multifamily thing.
Yeah, so like most people, I came out of the house flipping business. So I got into real estate in 2015, 2016, around that time. I came out of corporate life, went into real estate, became a realtor, figured out real fast that I was not a very good realtor. And then I've always had an affinity for being active, swinging a hammer. I've been in construction. I was raised in the Midwest. So kind of got into house flipping around that same time and just kind of progressed from single family house flipping like most do, built
Yep.
up a small portfolio of single family, then got into ground up construction through the COVID years. And the turning point for me was when I was setting cabinets in four houses at one time in Southwest Florida with no air conditioner.
Yeah.
That was kind of a rough time. So I decided that at that point in time to start getting my education, a
Hmm.
little bit more education into multifamily. I
Hmm.
had always done my own capital raising for my single family projects, going
Yep.
through private parties to raise the capital, and really enjoyed that side of it, and saw the opportunity in multifamily and just kind of naturally morphed
Yeah.
into that after going through a coaching program, et cetera. So it was just kind of a natural fit, the natural progression that I'm sure most people have heard of.
Yeah. It is a very familiar progression. A lot of people are in single family, whether it's, buy and hold or fix and flip. Let me ask you a question. Why from fix and flip to multifamily? Why was multifamily appealing to you?
It was the economy of scale and being
Hmm.
able to offer more in the capital realm to
Hmm.
more people. With single family, it was just so transactional that I could get one relatively large
Hmm.
flip done here with one investor, be very, very hands on. Where multifamily, I could expand that
Hmm.
offering to multiple people within a network that I have from my former days rather than just kind of funneling every single thing to one investor. So it allowed me to expand my base of investors
Hmm.
and be able to offer more to more people, which is an essential part of just
Hmm.
scaling your business in
Yeah.
general.
One good thing about where you started, a lot of people come into multifamily with no capital raising experience whatsoever, and you had been raising capital. So I assume that probably puts you a step ahead of a lot of other people who were brand new to the business. Next thing, you decided to do a coaching program. Let's talk about, why coaching and how that helped.
Yeah, so first I was very skeptical of coaching
Mhm.
programs. I don't like extremely aggressive sales techniques,
Me neither.
and most coaching programs are extremely
Mhm.
aggressive. So
Yep.
everybody's been to the free seminar that leads you to this, that leads you to
Mhm.
that, that leads you to that.
Mhm.
And you just spend more and more and more money every single time. So I was very skeptical before I went into it, but I found that because the numbers are significantly larger with multifamily,
Mhm.
that the education and the coaching was paramount to being able to not make a massive mistake for investors. And one person, I was actually another student at one of the coaching programs that I went to, which was the Michael Blanc program. Another student came up to me and I asked her why she was in the coaching program, and she said, well, if I spend X amount of dollars, that keeps me from making that same amount of a mistake to my investors. And
Mhm.
that kind of hit home where in single family, I could make some
Yeah.
mistakes along and learn as I went. And those mistakes they didn't cost a ton of money, or you could adapt and adjust pretty quickly. Where in
Right.
multifamily, it's just not one small mistake in underwriting or asset management or something like that. And you can put something out to investors that's a significant risk.
Yeah,
So
it amplifies. Yeah, a lot. I mean, a lot more than single family does. So,
significantly so. Yeah, it's everything is amplified by 10.
yeah, yep, yeah. And I went through the same coaching program. You knew that, but for everybody listening, I went through the same coaching program, and for me, it was similar. It was basically I didn't want to make mistakes, but I also wanted to accelerate my success. And that was the bigger reason for me was just, if I do this by myself, I'm going to figure it out, but it's going to take me X amount of years. If I get coaching, I could probably trim a lot of time off of that. And that was a big thing for me as well.
I think to kind of expand on that's kind of the thought
Mhm.
process that you need to have going into every vendor selection. Okay, well, I can do this myself, but how long is it going to take me?
Yeah,
What mistakes am I going to make along the way?
true.
And if I hire an expert to do it, somebody that's well versed in that, can it get me there faster and cheaper? And I think the answer to everybody's question in that realm is yes.
Yeah, exactly. Exactly. Well, awesome. Well, so how did things progress after the coaching? What types of deals? How did you get into deals? Stuff like that.
So I came in 2023, and
Okay.
2023 was a very every syndicator knows it was a very difficult year. Interest rates were notoriously high. Sellers
And
was
in
were
23, they were still going up too, which made it even more difficult because nobody knew when they were going to stop.
exactly still going up, and
Hmm.
sellers were still pushing back, and frankly, they still are.
Yeah.
But at that point in time, they were very discount resistant.
Yeah.
So, I mean, nothing penciled out. I spent 6 months just underwriting deals, trying to
Mhm.
build a team, et cetera, and just could not get anything done.
Right.
2024, kind of the same way, same situation. Although interest rates started they peaked and actually
Mhm.
started coming down a little bit. It offered a little bit of opportunity. Deal flow started to pick up. And then in the middle of the year, I lost my father.
Mm.
So I spent 3 or 4 months doing literally nothing, and then got back into the game, got a partner. We got a deal under contract, went down, did due diligence, and in the middle of that had 2 or 3 other deals pop up that people, lead sponsors, were asking me to capital raise for. Long story short, the first deal fell out of contract because of
Mhm.
physical conditions with the property. And then the other opportunities just kind of started to present themselves. So I approached the networks through the coaching programs as I'm
Yep.
going to be as active as I possibly can to get my face in front of as many people as I could possibly get in front of. And the opportunities just kind of presented themselves at that point.
Yes. And you know what? I love that you said that because I joined Michael Blanc in 2018. It was, I mean, it was an established program, but it was still like a lot of brand new things. He had just launched what he calls like the deal maker mastermind or whatever. And I remember, going into that and thinking, man, nobody's posted in this thing in 3 days. And I started thinking, maybe I should just drive the conversation. And same thing, I started driving the conversation a lot. And that's really what led to my first couple of deals and partnerships. And I haven't been active in Michael Blanc's network for years, but a lot of the people that I partner with now and I still talk with were because I decided to be active. And I think that's a great approach to take no matter what group you're in, decide to be active. If you're a flower on the wall,
Fly.
wallflower, whatever.
Fly.
Yeah. Yeah. Nobody's going to remember you. Nobody's going to notice you and it's not going to do you any good.
If I saw it once, I saw it 100 times. People would pay to be in those programs, some
Mhm.
a significant amount of money sometimes,
Yep.
and then they would either just put their note takers on the calls, or
Mhm.
they would just sit there and not say anything. Drove me up a wall. I was always active. Opportunities started coming out of that.
Yeah.
A lead sponsor approached me that had a deal in Charlotte. We ended up closing that deal in the middle of 2024. May of
Nice.
2024 is a 48 unit, $6.5 million acquisition in Charlotte, and
Mhm.
then spun immediately into another property, which is a 52 unit in
Mhm.
South Charlotte. That was an $8.5 million acquisition. We ended up raising roughly $4.5 to $5 million for those two properties. So, yeah, it was everything that kind of led up to that point was kind of just set the table. I expanded my investor base 5 times from what I
Mhm.
was doing in the single family realm. So everything was perfect. So, yeah, that's kind of how it all came to fruition.
So speaking of that, there's kind of a choice. There's kind of how do you want to be involved in multifamily? Some people like me, try out the capital raising thing and like, nope, I want to be an operator and decide to do that. Sounds like you're more into the capital raise role. Can you jump into, why you like that role and pros and cons of that?
So I'm a people person. I've
Hmm.
always been. I was the vice president of sales of a company 20 years ago. I
Hmm.
led a national sales team, and I've always had a consultative approach
Hmm.
to sales, if you will. So I don't like to call investing sales, but I see apartment investing as
Hmm.
alternative asset investing because that's
Hmm.
what it is. So when we're capital raising for projects, we're more consulting with people
Hmm.
to invest elsewhere than traditional means. So I see it as, look, I've been on the inside of operators, I understand operations. I've managed a portfolio myself. I understand the decisions that need to be made. I just don't want to be working with property managers every day on should the toilet get fixed? Who do we need to send out? I don't want to have to look at every single market out there and figure out what every single market is doing. I would rather partner with people that are specific to a market, that
Hmm.
know those markets, that I can understand, and then bring those opportunities to people that I network with to bring capital to deals. So
Yeah.
that's my philosophy in the entire game. Now, obviously, we need some sort of a role for SEC compliance. So, investor relations is typically that role.
Hmm.
With all the other lead sponsors that I'm part of, I sit in on every single asset management meeting. I'm writing reports constantly. I had a 2.5 hour long lunch with an investor yesterday to just go over how the properties were operating. So I have more of a hands on role than probably most do, but that's important for me to be the face of that investment opportunity to the investor because who else are they going to go to when
Yeah.
things may not be working out tremendously? So I see
Yeah.
myself as the voice of the investor to the lead sponsor. And marketing has always been interesting to me. I have a
Hmm.
degree in science and technology. So I love pushing marketing. I was in the publication field before. So I love pushing marketing out to people and then just leading them down a path to create wealth rather than just doing it through just the institutional investments at 4 to 8% a clip, which frankly, that's my biggest challenge in selling real estate investments. My biggest challenge is proving out to people that the numbers are real. So getting with a sponsor that knows what they're doing, has the track record of proof that has taken some lumps in the market. And
Yeah.
that's one of the things that I appreciate about you as a lead sponsor is you put it out there. You're like, hey, here's my 9 exits. Here's the two that didn't really prove
Yeah.
out as well as we thought they were, but here's the 7 that did. So
Yeah.
and that's what I, as a capital raiser, have to be cautious of. There's so many operators in this game that don't have the experience,
Hmm.
haven't learned from taking their lumps, but are out there pitching deals. And
Yeah.
it's like, oh, well, yeah. I mean, you may have underwritten a great deal, but can you bring that to fruition? Is the big question. So
Yeah.
that's how I see myself fitting in.
Yeah, you mentioned how I approach it. I talk about the deals that didn't do well on the webinars, and instead of focusing on the one or two that hit like the 40% IRR, I'm talking about the 5%. And I think investors care more about that, but everybody learns by making mistakes, and that's the reality. And I think more people should just be honest about that. And I've seen some people publicly post pictures of syndicators and, hey, this person lost my money and blah, blah, blah. But, I've seen a lot of that happen. And point is, people are taking their lumps right now. A lot of people, who are even really good sponsors are still taking lumps right now. The question I would want to know as an investor is, did you learn from it?
Yep.
And how are you doing things differently to make sure we never get in that situation again? I think, but yeah, appreciate your kind words. And then one more thing I want to just double down on what you said is being the voice to your investors. The first company that I co-founded, I brought a lot of investors in. I brought more investors than any of my other partners into that deal. And the funny thing is, I never thought I'd be good at raising capital, but I was not the person that wrote the reports and sent the emails after that. And when I left that company, guess what? A lot of those investors didn't, invested in the next deal and subsequent deal with my previous company. So, I look back at that one. So if you're raising money, you definitely want to be that single point of contact for all of your investors. And if you're raising money for somebody else, you need to insist on it as well. So that was a public service announcement. John, back to you. What are some of the challenges you had? I mean, you talked about doing single family capital raising first. Did you have any significant challenges going from single family to multifamily? And then number two, you mentioned that you've like doubled or tripled or your investor list. Can we talk about what's working right now to get relationships with new investors?
Some of the challenges, I mean, as I mentioned a little bit before, the first bigger challenge was getting over the difference between the way structuring is done single family versus multifamily. So going from a 6-month return of capital in returns to a 3 to 5 year hold.
Mhm.
That was a big challenge to get investors to come into it. Secondly, the structure's just different, right? I mean, it's a single family's more of a
Yeah.
loan than a limited partner structure. So understanding the corporate structuring and how that was done and answering the questions of, well, what if I want my capital back? And really the answer is like, well, you can approach me, but there's no legal method of
Mhm.
you getting it back. And I can see if I can exit you, but overcoming those differences of investment strategy. Lastly, and this was I can't hit this home enough, but proving that the projected returns are legitimate based
Mhm.
and a thorough underwriting process happened. Everything looks more corporate and less personal than when
Yeah.
you're in the single family game. So overcoming those challenges when you're going from an 8% note that's annualized to a
Yeah.
20% average annual return, investors look at that and go, I don't believe it.
Yeah.
I don't think you're going to be able to get there. So
Yeah.
getting them to cut you a check for the same amount of money and tie that money up for 3 to 5 years with a team
Yeah.
again, and not just you this time, but 3 or 4 or 5 other
Mhm.
people. It's like, okay, well, how are they vetted? What does this?
Yeah.
So just the transition, every single thing is extremely important from an investor standpoint, but how you answer those questions and how you move forward when you learn those lessons and take those lumps
Mhm.
and communicate. I'm the type of person that I'm an open book. Sometimes I'm too truthful in how things are going.
I've been accused of that as well. So too truthful. I don't know if that's a bad thing or a good thing, you know?
It causes you to lose some people. I always tell people I'm not a very good salesperson because I'm going to tell you as an investor, if you're going to send me your last $50,000,
Mhm.
don't. If you are going to rely on this cash flow for your income, do not send me your last $50,000.
Yeah.
Please. We are probably one of two, the only people in the country that wouldn't do
Mhm.
it. I'm going to truly assess what the person's ability is to make this decision and then try to guide them in a consultative way of
Yeah.
saying, look, this probably isn't a good investment for you. Go put it in the S&P and make 7% the S&P if that's what you're going to do.
Yeah.
So that, but then you touched a little bit more on creating relationships, expanding your investor base has, from my perspective, it takes about 6 months in
Mhm.
constant communications to get somebody to really trust who you are and see who you are and see that these are legitimate deals and get
Mhm.
over that fear of scams because there are
There's a
unfortunately
lot of them.
a lot of scams out there.
Mhm.
So overcoming that perception of syndications and real estate investing, that's a tall task. So I prefer to do it one-to-one on Zoom calls and have conversations like this. And a lot of times it takes sending people Google shots of the actual apartment complex.
Mhm.
I mean, people are
Yeah.
like, is the building actually there? Those are questions that you get from people that don't know you. So,
I've sent copies of like the purchase and sale agreement before, and it's like, hey, it's signed by me, it's signed by the owner. You can look in public records and verify that that's who actually owns the property right now. And I mean, there have been a lot of scams, and there's a lot of people that want to invest, but they're really, really worried about that. And that's something you're just gonna have to overcome. And it's sometimes, like you said, it takes 6 months. Sometimes you have to, send them all of the documents, 6 different referrals and things like that. But yeah, it's the overcoming the scam has been more and more of a question that I've gotten, in recent months, as opposed to
yep.
3 to 5 years ago. So,
Yep, it's virtually constant communication. I mean, we all do it via email,
mhm,
via text. I do give out my personal number to existing investors. I try not to do it with potential investors, but I have another number and an application for that kind of screens my personal contact information. But I do a lot of advertising on Facebook of just general education information, what real estate investment is and alternative
mhm.
asset investing, what that is,
Yep.
how stable real estate investing in apartment complexes are, the history of it. That type of information is important with people, but I find that the personal connection and having that person there and communicating with the people. And then the other thing is, once you have them in, doing what you say you're going to do is paramount for that
Yeah.
relationship to come back. And I mean, look, we're all in tax season right now. I have investors saying that I'm not going to provide you any more capital until you send me the K1s for our current deals.
Yeah, and I mean, K1's that's a sore spot for me right now because it's not 100% under our control either. I mean, we can get the documents to our CPA in January and not get K1's until June. That's happened before,
Yeah.
and I haven't issued a single K1 yet, but we had all of our information in a long time ago, and it's just like, oh, sorry, you touched a nerve there if you didn't tell, because
I can tell.
yeah. Oh my goodness. And I probably get 12 texts a day about those K1s. It's like, oh, I don't know. I don't know.
Yeah.
Anyway, yeah.
It is 0% in our control.
Yeah.
I mean, no, maybe one at
Mhm,
the very most, because we're going to get some questions
mhm,
about some stuff and how quickly we get back to the CPA and how organized everything is. Look, my wife's an accountant.
mhm.
She's been on the tax side of the corporate tax side in a large corporation. So I have a soft spot for accountants, but at the same
Yeah.
time, get my K1 done, please.
I mean, it's the first week of April. Everybody in the United States, has 2 weeks to get their taxes in. So the CPAs are ridiculously busy at this time. And what it feels like happens a lot is, they get to your file, they're like, oh, we have some clarifying questions. They send you an email, they ask the questions, and they put your file on the bottom of the pile and keep moving. And it doesn't matter if you respond immediately, they don't get back to your file until,
We're on the bottom of the stack.
yeah, it's bottom of the stack now, so that's one of those things that if I could help investors understand one thing, it's I have very little control, this much, very little control over when those things are released. The things that I can control is when I submit the documents to the CPA and how fast we are at answering questions,
Yeah.
but yeah, so that's a boat that's all right, let's I'm gonna have to go to my therapist now, but
I'm glad I could set you up for that.
yeah, yeah. So let's get back to you again. Sorry, didn't know that was gonna come out, but yeah, the K1s. But doing what you're saying you're gonna do, and I think where you're going with that, for one of the mistakes I made early on is, once an investor invested, it's like, cool, they're mine. And I would focus on finding new investors, right? And what I'm finding right now that, where does my focus need to be? It needs to be on my current investors as much as finding new investors. Yeah, I need to find new investors, but I texted a current investor a couple weeks ago and it had nothing to do with real estate, you know. And he turned around and said, I mean, this is just an example. He turned around and said, "You've got a new deal right now, right?" I'm like, "Yeah, we do actually." He's like, "So still open?" I'm like, "Yep." And then, within 24 hours, he had everything filled out in the portal and money wired. But I think where you're going with that is you need to keep the relations with those new investors. You need to do what you say you're going to do. And that's how you get the repeat investments.
Yeah, face-to-face communications, whether it's Zoom, I'm an in-person person, no, first and foremost. I know all of my investors personally. I've met
Mhm.
with them either on Zoom or at their locations, especially if there's a large investor. I run a small coaching program
Mhm.
of capital raisers as well. And I tell people that I'm helping
Yeah.
capital raise. Hey, if you need help and you have an investor that is looking at bringing significant capital into a deal,
Hmm.
especially if I'm on the deal, tell me where to fly. Flights are going to cost me less than $500. I
Hmm.
will get there and we'll figure out how things work out at the
Yeah.
end. So if there's somebody that's willing to cut you a check for a significant amount of money, the least you can do is go meet with them personally. I'm a people person. I'm
Hmm.
a I'm a personal contact type of person. Like you said, we do one of the things that we do on our meetings is we do live webinars every month for the first 6 months, and I create a small presentation of how our operations are going, very transparent on, hey, our occupancy is lower than what we expected it to be at this point. Here's where our renewals are coming in, here's how quickly our turns are happening, et cetera, et cetera. And we just go through it. We're very upfront, and everybody, the investors, the responses are like, we get it. You've got your hands around it. We see your
Hmm.
face. We know that you're in this business. So we
Yeah.
appreciate the update. So that I would tell everybody, have personal communications with people. Don't just send out a newsletter. It's not going to keep people up to speed on the projects.
Yeah, I like that. I like that. I mean, the biggest complaint that I see right now in the environment we're in, a lot of people are losing money, but the biggest complaint I see is not getting communicated from sponsors, right? I lost money on a deal last year, and I found out from, one of these multifamily groups that I was in, right? I mean, somebody posted a list of projects that had foreclosed, and lo and behold, there's the property that I had invested in,
Oh,
and
wow.
I'm scratching my head and I'm like, that foreclosed 2 weeks ago. It's like, oh, okay. I guess I lost my money, So yeah, one of the biggest things that I hear, and if you're doing these Zoom calls or, face to face, here's how the project's going, you're gonna be ahead of the game. I've thought about this. Right now we're doing annual state of the properties, but we should probably do, quarterly or semi-annual. The other thing that I've been doing a lot lately is, we'll invite our investors to lunch. We'll have a lunch and we'll put a bunch of investors in the same room. And next week we're doing a Top Golf event. It's going to be the same thing. We're sending it out to all of our investors first. Come join us for Top Golf. But yeah, the more you can do to be in front of those people and increase that kind of know, like, and trust, the better you're going to do as a capital raiser.
That's exactly right. I mean, referrals are the number one thing. I mean, look, in real estate, a referral is gold.
Yeah.
So, I mean, the more you communicate with them, and look, apologize if the deal does not go as well as planned. There's a lot of things. There's markets that we cannot control. We're all human. We're gonna make mistakes, but I can guarantee you,
Mhm.
just like when you were a child, the
Yeah.
more you tell the truth to your parents, which your parents being the investors in this scenario, the more you tell the truth to them, the more grace they're going to give you
Yeah.
in the event you do get in trouble. So, my
Absolutely.
advice to everybody is communicate as much as you possibly can,
Yeah.
have personal conversations.
Be like John and me, be honest to a fault.
There you go.
Boom. Yeah, be too honest. But all right, well, we need to start wrapping up right now. So, first question of the last questions, first of the last. What's next for you?
What's next for me is partnering with as many operators as I can possibly partner with that are specific to a market, that are experts in that area, that have had exits on their track record, and
Hmm.
then just expanding my investor base to grow into the multifamily space, in addition to
Yeah.
another small fund that I'm starting in a different alternative space. So
Awesome.
I won't plug that in this realm because this is multifamily, but yeah,
It
other
is, but go ahead and tell us what space it's in.
Yes, so I'm actually a general partner in a Bitcoin fund that's starting this month. It's a Bitcoin futures trading firm that trades very similar to MicroStrategies. If anybody
Hmm.
knows what it's actually called Strategies now, which is Michael
Hmm.
Saylor's group. So it's trading Bitcoin for investors.
Okay.
The company's name is Petros Investments Partners. We're spinning up a website this week. Our main partner has been a trader for the last 7 years in the Bitcoin
Hmm.
space, has done very, very well for himself. Tried to spin up a fund
Hmm.
last year and just didn't have any investor relations experience or the
Yeah.
ability to do it. We're giving it another go. And Bitcoin, it's very volatile. If you're bullish on real estate, in my opinion, you should be bullish on Bitcoin.
Yeah.
It follows the same trend as interest rates.
I'll tell you one thing, and this is more to people listening than to you, John. I think you know this one, but if you learn how to raise capital, you can essentially rinse and repeat in any other space. All right. You learn how to raise capital for single family homes. You have to make some adjustments, but guess what? You can raise capital for apartments. You know how to raise a capital for apartments? Guess what? You make a couple of small tweaks and you can raise capital for Bitcoin or any other investment you want. So I've said this multiple times. I think capital raising is the most important skill in real estate investing, but not just because it helps out most in real estate investing, but because it's fungible. You can take it from one field to another. Fungible.
Investors are looking for diversification, especially accredited investors. They don't
Yeah.
want to just play in some spaces. They can live with some volatility. Usually they can live with some volatility. So and if they can't, they probably shouldn't be investing in your funds anyway.
Right. Right. The way I look at it, with a lot of investors, they have certain allocations. I want to be their go-to person for multifamily. All right. And I can be the go-to person for a lot of people. But if you're in a position where you have multiple investment opportunities, you could be the one alternative guy for people as well. So there's lots of different ways to do it, and none of them are wrong. By the way, but there's lots of different ways to get it done, and just pick the one that works best for you and go. All right. Next question. If you had to give advice to somebody who is just starting out with multifamily real estate, what would that advice be?
My advice would be to not try to recreate the wheel.
Hmm.
Multifamily investing and multifamily operations, there's pretty much a set model for it.
Hmm.
So don't get over your skis and try
Hmm.
to do things that are not proven to work. Partner with as many experts as you possibly can. And like you said, capital is king. A lawyer once told me that your investor database is your most valuable asset until you reach 1,000 doors.
Yeah.
So I try to nurture that investor database as much as you possibly can and don't get over your skis or you're going to get in trouble.
Yeah. Yeah. I was thinking until you hit 1,000 doors, I'm curious. I guess once you hit 1,000 doors, you could probably start chasing institutional, is why he's saying that. Yeah, yeah. Because I would say that investor database is, going to be the most important thing for quite a while. But yeah, I guess once you hit 1,000 doors, you have access to other equity and you don't have to just use retail investors. Got it. Got it.
Yeah. Once you hit 1,000 doors, you're probably chasing bigger deals and
Mhm.
you're able to get bigger checks from
Yes.
family offices and other in other
Right.
equity plays.
Cool. All right. Last question. How can listeners learn more about you?
Rampantlioncapital.com. It's a small website that I put up. We'll be adding stuff to it over the course of the next month or so, but that is our base of operations.
Awesome. Rampant and Lion Capital, we'll have that in the show notes. So anybody want to get in touch with John, head over to that website, Rampant Lion Capital. Once again, hit the show notes, tap it, and that magical internet thing is going to whisk you away to his website. So whisk you away to the website. That's an alliteration.
That is
Awesome.
a good one.
Yeah. Wow. I mean, I didn't even mean to, put that out there,
I'm
but
going to put that as a new sign off.
I know. Yeah, rampant line capital. All right. Awesome. Well, hey, John, thanks for coming on the show today. Very much appreciate your time. And you will be talking soon. Guarantee that.
Thanks very much, Brian.